2020 was an amazing year in crypto. Bitcoin reached 20k, Ethereum 2.0, DeFi taking off, but all of this is nothing compared to what's coming in 2021. So in this video, I will give you 7 predictions for blockchain in 2021. If you don't know me, I'm Julien, and on my channel EatTheBlocks, I teach blockchain development. My first prediction is that Bitcoin will reach $100,000 in 2021. Does that sound really crazy to you? Let me tell you why I don't think so. At the time of releasing this video, Bitcoin was at $30,000, so we are already above the peak of 2017. That is very important. Then in 2021, we will have the support of institutional investors. We already had institutional buying Bitcoin in 2020, but in 2021, this trend is only going to intensify. What is good with institutional investors is that they hodl. They don't freak out if the price drops, they just hold. And this is very bullish for the price of Bitcoin. And in 2021, on top of institutionals, we will also have retail investors that already start to come back. We start to hear a newspaper talking about Bitcoin more and more. Personally, I have many friends outside of the crypto community that have asked me about Bitcoin. So sometime in the first quarter or first half of 2021, we are going to have a huge wave of retail investors pouring their money into Bitcoin, and $100,000 is totally doable. My next prediction for 2021 is that we'll have a Bitcoin ETF this year. The Winklevoss brothers have been hard at work for many years for this to happen, and the SEC has been hard at work to prevent it. But I think that this year it will finally happen because of first, institutional who are more and more interested in Bitcoin. Second, banks that start to respond to the new demand by building trading desk for crypto. And third, we now have a good offering for crypto custodian services. So now that Wall Street can have its cut in the trading flow of Bitcoin, they don't have any incentive left to keep lobbying against a Bitcoin ETF. My next prediction for 2021 is Ethereum that will go to $10,000. Isn't it crazy that even though Ethereum is far more capable than Bitcoin, even though there are many more project, user, investor on Ethereum than on Bitcoin, the market cap of Bitcoin is still bigger than Ethereum? It doesn't make any sense. It's only because the mainstream media only talk about Bitcoin. It gives a distorted version of what is crypto to the masses. The masses just don't know any better and invest in Bitcoin only, not even aware of the existence of Ethereum. But this year it's going to be different. My prediction is that mainstream media will start to pay more attention to Ethereum and will start to have an influx of retail investors. Ethereum, like Bitcoin, will also benefit from all this new support from institutional investors. My next prediction for 2021 is that we'll have another bull market for DeFi. The DeFi wave of 2020 started when Compound created the concept of liquidity mining in June of last year. It was an overnight success, and many other DeFi protocols quickly copied the idea. We have so many brilliant minds working in DeFi, bringing new innovations every week. We have thousands of DeFi investors that are in the starting blocks, ready to jump on any new opportunity. So in 2021, a DeFi protocol will introduce a new idea that will be very successful, and this will be the spark that reignites the fire. My next prediction for 2021 is that a couple of DeFi protocols will move to a sidechain. High transaction fees were one of the big reasons that ended the DeFi summer craze of 2020. In the meantime, we had the launch of Ethereum 2.0 that is supposed to offer much more capacity to the Ethereum network and drastically lower transaction fees. But we only have launched phase 0 of Ethereum 2.0. The full migration will only be realized in 2-3 years. So in the meantime, we need to find some short-term solution for transaction fees. Sidechains offer a trade-off with slightly less security and less composability in exchange of lower transaction fees. There are a couple of solutions that are actively worked on, like XDAI or Matic Network. We also have a couple of new technology like Optimistic and Zero Knowledge rollups that could be leveraged for sidechains. So in 2021, we'll see a couple of big DeFi protocols that move a part or all of the activity to a sidechain. In terms of usability, it will be a little bit more complex for users, but it's the price to pay for lower transaction fees. When this move to sidechains happens, Ethereum will be able to recapture some of the DeFi activity that it lost to competitors like a Binance Smart Chain. My next prediction for 2021 is that we'll see some consolidations. When the industry is still in its early stage, usually we have many small companies that each offer different solutions to the same problem, but a lot of these solutions are redundant. Later in the innovation cycle, some companies get more successful than others, and they end up buying a lot of the other smaller companies. That's the consolidation phase. In 2021, we'll start to enter the consolidation phase for some segment of the blockchain industry. We already started to see this in 2020 actually, and it will only accelerate in 2021. For example, in 2020, Consensus bought Truffle, the company behind the framework for Ethereum smart contracts. Yearn financed the project of Andre Cronje, also merged with a couple of other DeFi projects. Infura bought a service to optimize the timing of when you send a transaction. So in 2021, we'll see more consolidations in a development tool, but also in DeFi projects. My last prediction for 2021 is that we'll have a big scare from regulators. Already in 2020, regulators showed that they were more and more concerned about crypto, but in 2021, the threat is going to materialize, especially since we'll have a new administration in the US that will want to set the tone regarding its various policies. One extreme possibility would be to completely make it illegal to have a self-managed wallet, but that would be a bit difficult to enforce. Another possibility would be to oblige exchanges to only allow transfer from and to addresses that were KYC'd before. Another possibility would be that stablecoins are made illegal. Many people think that regulators mainly care about Bitcoin. Actually, what they are most afraid of are stablecoins because it's the biggest threat for the existing financial system. Another possibility would be that the SEC sues a company that operates a decentralized exchange like Uniswap for operating illegally a securities market. That would set a really bad precedent for the DeFi industry. This video is sponsored by 1inch. I receive a lot of inquiry of crypto projects who want to advertise on my channel, but so far I've refused absolutely all of them because I'm very picky. The reason why I've accepted this collaboration with 1inch is because I genuinely believe this is a great project. 1inch is a DEX aggregator on Ethereum. This project is super hot right now. Everybody is talking about it, so it's very important to know about this project. When you trade an ERC20 token on Ethereum, if you want to get the best price, you have to manually check many different exchanges like Uniswap, Curve, etc. This can be quite boring and repetitive. 1inch does this comparison for you automatically. You just tell it how much you want to buy or sell, and it automatically finds the exchange with the best price. Even better, 1inch is smart enough to split your order across different exchanges to minimize slippage and give you the best execution possible. If you are doing a big order, it's extremely useful. Why everybody has been talking about 1inch recently? It's because they just introduced the governance token. Holders of this token have the right to vote on various protocol settings, including a couple of fees like the spread surplus. The spread surplus is generated when the executed price of a trade is slightly better than the price quoted. Initially, 0% of this spread surplus will go to 1inch token holder, but it can be changed later with a vote. It's also possible to use your 1inch token to vote on parameters related to 1inch liquidity pools. So beside the DEX aggregation feature, 1inch also has its own liquidity pools for 1inch tokens. There are various fees paid to liquidity providers of these pools, and with the 1inch token, you can also vote on these fees. So what about the price of the token? So just after the 1inch token was launched, within hours we reached a peak, and after it crashed. When a new token launches in DeFi, there is always some irrational euphoria at the very beginning, and we often see this pump and dump pattern. What really matters is after this initial euphoria, do we keep crashing or is there some sort of price stabilization? So it seems that we found a support at $1, so that's a good sign. On a fundamental level, the DEX aggregator of 1inch addresses a very important problem in DeFi. 1inch is the leader in the DEX aggregator niche. And the 1inch token allows to vote for many different parameters of 1inch. So I'm pretty bullish on the token on the long term. So how to get some 1inch tokens? The first way to get some 1inch token is to buy some. So currently 1inch tokens are listed on Binance on the 1inch USDT pool. The second way to get 1inch tokens is with the airdrop. With the airdrop, all wallets that have interacted with the 1inch protocol until December 24, 2020 midnight will receive 1inch token as long as they either did 1 trade before September 15, 2020, did 4 trades in total, traded for a total of at least $20. The last way to get 1inch token is to provide liquidity for one of the 6 liquidity pools of 1inch. So these pools are managed by 1inch itself and are accessible on a website. The initial liquidity mining program will distribute 0.5% of the total supply of 1inch tokens to liquidity providers of the 1inch pool during 2 weeks starting December 26, 2020. If you're interested in 1inch, check out the links I put down below. In any case, remember that you should never invest more than you can afford to lose. I will see you on another video. Bye!